Mm. Mm.
All right, guys, welcome to our live analysis session. So it was a very interesting week last week. Um, I tried to treat Mondays as a day not to trade too heavy. I am in a few trades, just experimenting a little bit. Um, I'm just trying to see what I can grab. I just got stopped out of some of my positions with gold and stuff, so I I'm gonna re-go back to the drawing board and just see what's going on. I guess probably has some news come out that didn't really help the narrative. But yeah, uh, yeah, still watching to see what we can get going on. We'll go on. It was it's an interesting time. Yeah, price just kind of spiked up right now, but let's just take a look anyway. But anyway, let's take a look on the weekly first. So as you remember from this diagram that I've shown you guys, if you start off with this area here, this area at 106, if you notice, we don't have any weekly back candle closes above this area. The day we do have something like that, the price will fill the liquidity void that's been left between this high and this low right here. And we will be getting back into the 110s. At the moment, if we zoom in a little bit here, the current status of where we are, last week's high closed above the previous week before that, and the week before that's high. So right now we're on the fourth week of January, roughly, and we can say the fourth trading week. And the prices closed above the previous 2 weeks before that. And we stayed in this supply zone. Now, the activity in the supply zone is important. I told you earlier on that there are equal highs and there's a liquidity void here that the price would want to fill. And I'm sure the price will be magnetized towards these old highs here. However, just looking at the grand scheme of things, there are kind of a few things to discuss here. I do think that we should take a look at when it comes to how the price is behaving. We'll take a look at those right now. So I'll say the first thing is if I go to the daily time frame over here. Now I know I have a lot of boxes drawn, so I'm just going to try to highlight over these with colors that can help. Now this area right here, let me see if I can fix the color. See if I can use another color that really stand out. All right, here we go. So over here in this area, I'll reduce the opacity just a little bit. And let's put this orange around it. So in this yellow area here, we have a D1 supply order block. And you can see that when the price broke out of this area to get into this bullish trend that we've been seeing for the last couple of days, we have a liquidity gap. And this liquidity gap is a confirmed one because I've been through all of the different charts just to compare. Now, my rule of thumb is if I want to confirm a liquidity gap, I always like to use about 3 different brokers, usually the largest brokers with the best liquidity feeds, price feeds. So for me, it was ICE US, which has this gap also, not to the same measure, but has the same liquidity gap. So that's another chart. We have the index chart here, which is number 3. So that's another one. Capital.com, they all have this same liquidity gap. So in essence, across all of the charts available on TradingView, we have the same liquidity gap for the dollar index here, no matter where you put it. So coming back to my original markings, which will be with TVC here. All right. What's the setup? Now, for me, looking at the way the price took this high right here, and we have some bearish activity coming in, I do think we're going to have a strong bullish dollar trend. And this is kind of like the part where I say that the market is highly manipulated and can be very annoying at times. The reason I'm saying that is because right now, as the price is, we do have a strong bullish trend. And because of this gap over here, if the price was to ignore this gap and continue going, then we're gonna always have to stay on our toes. I guess maybe unless the price breaks above this 107 point, then maybe not. 106, 107. But for now, where the price is, we do have a liquidity gap that the price can easily come back to fill. Now, in terms of market structure, like I was discussing earlier today with WGA students, the price returning to the other side of the supply order block is a very normal and efficient flow of price action for it to return to the other side and re-optimize this supply zone for demand and basically fill this liquidity gap and etc. down here. So I do expect the price to come to about 102,580 and then start taking off again. So I'll put it right here. Once we get something like that, if the price does push short, then we should be breaking past here and going long. And it makes sense. I mean, we'll look at the fundamentals in a minute to kind of plan our timings, but looking currently at how the price is behaving, the structure of price we have here, if this does pull back short, this will be a great pullback to continue for the long. Okay. Now, in my view, we'll have to wait a little while for us to kind of get a confirmation. At the moment today, the price has taken the lows of the previous day, but if we get a body close, that will be a better indication that we should be going for a short. Now, all over the place, we have some pairs which are, kind of bouncing around all over the place. And we have some strong manipulations going on the price. But nonetheless, we should be hopefully seeing some, how can I put this? Some better opportunities show up tomorrow. But really, this is just my structural analysis on the dollar index. If I go to the H1 to explain a bit further, I did talk about this before, that we had this demand order block here, which the price has invalidated now because it's closed above and beneath, which is this right here. Let's just take this right here. Price is closed below and then a closed right above and violated the area. Should have stayed within the range. So that's not where the price is respecting. It looks as though the price is looking at this area here instead. Now, these highs are equal, so there might be a little bit of a spike up before a spike down. But looking at the structure of the price here, it was clear that we are going to be going for a short. And once this gap is filled again, the worst the price could get down to, I think, is 102,500 or 494 to this little demand order block where there's a slight little gap between the demand order block and this low, and then we're off. Now, there isn't much US news this week, so if it doesn't mean the price can't move short without US news, but if it is going to go short with some news, that might help. Okay, but again, it's only Monday, and it makes sense to see the price do something on this Monday. Moving forward. Yeah. So I'm gonna be watching and waiting and seeing what the price is gonna do. Now, if I actually go to the charts to correlate, there's now, as I said, for the whole year, I made my decision finally to just focus on the major pairs. I'm actually even gonna save a new file whilst I'm with you guys. So let's take a look at this together. I'm gonna delete all the charts that I'm not looking at. So all of these charts down here, everything apart from silver, I'll keep silver, USD. I'll keep this and this and this. I'll keep the oils as well. And don't really look at these, but I'll keep them. Then I delete all of these apart from the UK 100, US 30. All right, US Tech. Cryptos, I'll leave them because we do need them. All right. Take away all of this stuff too. For now. I like to leave the cryptos just to look at my own cross-market analysis to understand how the dollar's operating sometimes. So I would leave those. But all the futures markets, I'm not looking at those, so I can get rid of that. I'm going to use this US 30 Treasury notes because it does help to do some analysis on the dollar, so I'll keep that here. All right, but I'm reducing it. So all I'm going to be really looking at and trading is these. I think, to be honest, I'll leave Brent oil. Don't need spot oil. Get rid of natural gas because I don't trade it, so I'm not going to try and force myself to do that. Yep. I'll leave this here. You know what? I think even with the indexes, I'm going to take them off. I made up my mind. Apart from the US 30 and crypto, I'm just leaving it as it is. I'm going to save this as a new set over here, and I'm going to call it focus. So give me a second. I'm saving this. I'm going to call this focus. Now, I think I can even do better than this and reduce it. I'm going to think about it a bit more, but I'm just going to call this focus.set, and then we can focus here. All right. So starting off with what we have going on now, I do think that the USD CHF has a little bit of a short to do. I've had a nice little induction here. Price has done that into supply. Now, in other charts, these highs are actually equal highs or relative equal highs, but between 1 pip apart. All right. Now, if I go to the H4, then to the H1, this is the reaction that's going on. Nothing much really, but if the price is gonna go short, we have these buy order aggregates across here where the price is just very, very almost a perfect trend line, which means this is artificial price action. I still want to wait a little bit. I'm not going to rush to go and try and get into USD CHF for a short, but if it does decide to go short today, then the entry is basically coming up now. Because from the H1, if I take this supply zone here, this is the largest. Price has kind of tunneled itself back into here. So if it does go short now, then that would be a great short. All right, I'll go to pound USD next. Pound USD is probably not the nicest one to look at. It did do a really nice reaction last week. I think it was a bit early on the reversal on the dollar in the sense that it moved before the others. It took these lows here, triggered the sell stops, and took off the other way. I do think there's a point coming where it's going to give us a short because again, we have this buy order aggregate situation, near perfect trend line. Then there's a demand order block where the price actually didn't return into right here. It didn't, this low over here, this one right here, didn't return into the order block before we're going long. So again, the demand behind this price isn't that strong. Keeps pulling back and giving us this kind of wavy effect of like a, I don't know, some people call this like a wedge pattern effect. Okay. So I do expect the price to get somewhere around about here and then give us a strong drop. Now there are pieces of high impact pound news that might do this. And we might have a little bit of a deviation away from the dollar strength of the pound, possibly. But this is just my quick overview. Euro USD. I'm being real with you guys. Out of all the pairs, even though Euro USD does make sense, I don't really like the way it looks. But for those of you who are Euro USD traders, the price has finally broken beneath this very strong demand order block. It hasn't finished filling out this fair value gap or this one down here. But we do have this break here where the price has left another one of those fair value gap situations. So if the price was to pull back for a long, I would expect it to come here and return to this demand order block that's been flipped to supply right here. Or if you want to be, you can use this one down here. Is within the same range. The price gets here, it's only about 40 pips away. I do expect another move down to continue the rally down. Okay, that's possible. Now, the other side of the story is that the price could break on the other side and continue and try to take the high of the previous day. We'll look at how the strength of the dollar index comes in to affect this. Now, there is a lot of Euro news this week. There's high impact European news this week. So the Euro USD might have a little bit of a mind of its own and veer off from the general correlation pattern of the dollar. So I won't put it past the Euro USD to do something like that, which is why I'm just suggesting and speculating for today. AUD USD, it's been fantastic. I told you those two were my favorite two last week, and the price did break down and do what it did from this area here. Even though there's a lot of accumulation, sooner or later, we did get the breakdown. Now, with where the price currently is at the moment, now on some charts, the price doesn't read as taking the low of the previous month, but on AUD USD, on IC markets, it has, which IC markets is to me a tier one or very close to tier one broker. So I truly trust the price feed here. It has a slight reaction, not a strong one. It's broken beneath or above this H4 supply order block, which give us the short down to take the low. So it's just hanging in here. So if it does pull back up, maybe come to this gap here and even take this high, might go for another short again. We'll see. Okay, on the H1, how does this look? not really exciting anyway. But the price is going to pull up for a long. This would be a good point that the price can particularly go from and just do what it needs to do. All right, USD CAD. I'm doing all of these fast, and then you can play this back and slow it down and pause it. Now, USD CAD has just taken a significant low, but it's not the low of the week or the month. Okay. And as I was looking at earlier on this afternoon, even though it looks like a possible reversal, my thing is that for there to be a market structure break, all right, let me just show you what I mean. The last swing high before the price took the low is very far away from here. Now, some of you will say, is this swing high here? But that's incorrect, technically speaking, because the price already took the low before the swing high. You would have had to go up here, which that's not really possible. If the, or it is possible, but with the current volatility, I don't think the price is looking to do that. And the dollar index is already pushing short. So I don't think this movement is going to hold. I think this is, in fact, there's a movement that's going to trigger a further short. And price is most likely going to take this reference point, which is what is using at the moment here, as you can see, and just continue going short. Okay. From this trigger of a long that it had. And it probably might even break down further if the dollar index gets strong enough short. Okay. So for me, no trade on USD CAD right now. USD JPY, I do want to say this with USD JPY that it is definitely going to continue going long. And the Japanese yen pairs can have a mind of its their own. This tomorrow night, so early hours of the morning in the UK, so 4 in the morning, we have the Japanese interest rate decision coming out. Now, in the early days of my trading years ago, like 2018 and stuff, the Japanese yen news never used to really do anything to the charts. But as of recent, they are really those pieces of news. Sometimes they even don't have a time on them, but they do affect the price quite a bit. We do get some quite a bit of a strong move on Japanese yen pairs sometimes at random times, like 3 in the morning. You see something like pound Japanese yen do 300 pips. So again, it's really a a thing to watch. For me, I've seen that USD JPY has given signs that it does want to go short. It's taken the high of the previous month right here, with a really nice clean daily induction here where the price has taken the high of the previous days. Going on the H4 doesn't look that nice or anything special, but it has come to fill out this little or a pretty small fair value gap. On the H1 here, price has given us a little bit of a wake up sign, if you want to put it this way, with the drop today. The major break point is when the price breaks beneath this demand order block. Now over here on the H1, this small little area on the H1 is a gold mine for a short. Now, if you remember what I said to you about trends last week, when the market is trending in a direction, it's not the time for you to look for reversals. Now, there is a reversal happening right now, which is just kind of laid out itself out. Now, you can imagine this to be like the neckline. I'm not a head and shoulders pattern person, but this kind of fake out here where the prices come, it looked like it was going to break the neckline of a head and shoulders pattern, but didn't. It's common market tactics. Now, hopefully, the price will break down. And when it does actually break down through this order block, if you don't catch it anywhere else, wait for the break and flip of this H1 area and just look for a really nice short all the way down. Now, I've done the thing that I hate to do, which is to open up all the charts at the same time. But if I just go over here and we take a look, now there is a low, which is this low right here, which you can't tell from here, but on the M15, it is equal lows. And I'll kind of cross-check this across several charts. It all reads the same. It's right here. If you see it, guys, it's this area right here. These lows right here are perfectly equal. So the target for me is 145, about 580. Right about here is the target. Okay. And that will be it. That's about, if you get this trade and it works out just like I'm expecting, we're looking at 10 pips or 9 pips for 200 pips. And I've had these kind of trades before happen. That's a 1 to 20 risk to reward. So I wouldn't want to miss that if I were you. So I'm personally watching this trade, seeing how it plays out. And hopefully we, out of it, we get something great. Okay. So USD JPY for so far is my top pick. I like it the most. It seems to be pretty reactive and sensitive to the dollar's strength. And hopefully the price can, from that give us something good that we can work with. So that's my idea, really, when it comes to working with the dollar here. And I'm just hoping that the price will kind of follow through and hopefully grant us some nice trades. Okay. So final thing is, let's go back to gold quickly. Now, gold was mean today because I was in profit by quite a nice little bit, and I kind of wish I took the profit out now. Happened so fast the way the price spiked me out, but the price has taken the low of the previous day. I do know gold has more room to go for a short, but this last spike here was triggered by absolutely nothing apart from the US Open and just market manipulation. But I do think the price would want to go for a long. So I'm going to give it a second try again. And my target for gold, I was explaining to you what I'm looking at. If I go over here to the H4, we have a supply flip zone that the price is operating in. Unless the body of the candle closes outside of this supply area, even though the price has kind of been a bit mean here, I do expect gold to give us, if you see over here on the H4, there's a pretty obvious fair value gap here that the price can come back to, which is also, I know this is a bit of a strange looking price action setup, but we have a demand zone, which the price used to push the price long, but then just broke down and never returned. So my targets really is about 280 here, something like that. So that's kind of like my aim for getting in. I expect the price to give us something like that as a move. And from there we can, make amends to try to capture something. That's kind of what my idea is right now. So if you want to give it another chance, this is where I'm taking my chances from. I do think the price is going to push up long now after this manipulation bear trap move. If you got stopped out with gold, that's all right. Just try again. But this is my target. Now in the H1, there's a supply zone to support my argument, which is right over here. And I think once the price gets in here, then it's ready to short again. So that's what I'm really looking for to get back into for a trade. Okay. So let's see how that plays out, people. And if it plays out for you, I mean I'll be happy for you if it plays out for you in the same way. But I'm gonna take another attempt to get in, and yeah, see what we get. All right, so let me see. That's it with gold now. As I'm talking, it's actually taking off. So hopefully it does what I'm looking for and pushes back up here. But it's worth taking the risk on this trade. I think it's worth it to go for it. Keeping my risk reduced to half. It's just unfortunate the way the price got me. Should have got in after 230. Now with the US 30, speaking about 30s, right? If you guys remember last week, I told you that this demand order block was the only thing holding the price from going anywhere past, well, giving us a major short because we still got these equal lows on almost every chart that are still just hanging around here. Now, I'm not buying it yet that the price is just going to shoot through the roof. I'm sure there's going to be a long, but I just want to put this out here as a reference. Because the price is in territory it's never been before, there's nothing to the left, as you can see. If I remove the market watch, there's nothing to the left as a reference point. I guess the best reference points you can use would be the highs of the previous years. So, for example, the high of 2021 is over here. All right, we can use that. Then the high of 2023 is over here. These are the only reference points we can use. And the way we use these is to see what the price did when it reached there and to see what happens if the price will ever come back there. Okay, that's the thing about this here. Now, because this is a monthly candle itself on the monthly time frame specifically, there's still 9 days, which is about, let's just see. Now, let me see. We have until next week, Wednesday. for in the UK for us anyway. Next week, Wednesday is the last day of trading. So we have the whole of this week, then Monday, Tuesday, Wednesday next week, where the price can potentially give us something. Now, if the body of the candle doesn't close above this high of 2023, but the wick does, we still have room for the price to give us a short. Okay. And I do expect one to happen. Okay. Now on the H4 and H1, this was a brilliant move, by the way. Such a lovely long, the way it happened. Kind of wish I got in. Such a lovely move. So easy and nice to figure out over here. Market structure break was just above this swing high. Bam. Quite a few attempts to get in. Stop loss just there, and then bam. It's a banger. Anyone who caught this was having a good day for sure. But it's not over yet. Even if the price carries away wherever it carries to, I may not even just try. I won't try to chase it, to be fair. But all I'll say is that the day that we do have a D1 body close, just a daily close beneath this low, on the return, I'm going in. And I'm not going to close it until at least this equal low right here, because I know it's coming. And even when I look at the price, how it behaved here, this price action here, the candles are, I've checked this on every chart, the candles are the same. This is not the cleanest kind of open and close here. We have a gap between the close and the open. The close is down here, the open is here. And you can't tell, it just looks like the broker made a mistake, but this is a close and open gap. A little bit more harder to see from the D1. So even down here is a good target. But I'll wait for the price to come back. And when that moment happens, I'm in. So this is kind of like my Monday overview. The last thing I do want to do quickly is if I go over here, I do want to pull up FX Street for you guys so we can have a look. So if I go to FX Street really quickly, so if I do FX Street this really quickly over here. All right, so for the week, as you can see, the Japanese high impact news is here. And again, it says NA over here. Doesn't give a time when it's coming out, which is just strange to me. I need to figure out. I'll be honest, I've never taken the time to actually figure out why exactly is that it doesn't tell us when the news is coming out. There's no time. It's a bit strange with that one. But nonetheless, anyway, we don't know what the time is, but it's definitely coming out on Tuesday. Somewhere between 3 and 7, I'm guessing, because 7 o'clock is here, 3 is here, and there's a tap. So it's anywhere between 3 to 7 in the morning UK time. So we have our first high impact Euro news tomorrow at 9 UK time. NZD news here. All right, Wednesday we have high impact European news and pound news in the morning. Then we have the Canadian dollar interest rate decision. Now, it's interesting, it's coming in at 2:45 instead of 3 o'clock. I'm not too sure why it's at 2:45 and not at 3 o'clock. I don't know why they've changed that. It's a new change. I've never seen that before, unless that's a mistake. Because it's usually at 3 o'clock, but hey, things do change. All right, on Thursday, we have the high impact euro. So you see, we have the ECB interest rate and deposit rate coming out, refinancing rate options and rate on deposit facility. Okay. We have the GDP. Okay. Now, this is a bit crazy because right now, the GDP for Q4 for the US was previously 4.9 and is expected to be 2%. If that does happen, then that gap right here is going to get filled out because that's very heavily negative for the dollar. That will send the dollar right back down again. So it wouldn't be so to get that strong movement down. Okay, because that's a very low reading compared to previous. It's less than half. I didn't even pick that up the first time I looked at it. Okay. Friday, we have a little bit of more US news. So, okay, Thursday is maybe the hallmark day for us to look at what's going on. So between now, let's say, for example, if we're in USD JPY now, if the USD JPY is still shorting and the dollar is still clearly going short before this news, then we'll hold until this news happens and then come out straight after or just after. All right. So that's kind of like my setup for the week. And we'll catch up later on. Tomorrow I'll continue where I am. This is just the longest one for the week so that it gives you a structure of what to do. And then from there you can continue on. All right. Catch you guys later on. Everybody take care and have a great day.